I'm joined by Mark Kronfeld, the Managing Director at Blue Mountain Capital. Mark, thanks for coming here.
Oh, my pleasure.
You mentioned on the panel that there are some specific sectors that you think investors are honing on to look for distressed opportunities now when I think there's a lull in distressed markets. What sectors could you identify for us?
Sure. I mean, it's hard to say. There's certainly a lot to look at. Whether there's attractive pricing or not depends, right? It's all price dependent. I mentioned on the panel infrastructure, sort of privatization of toll roads and highways, things like that have created interesting opportunities. Shipping. We know shipping has been a name that everyone's looked at for the last couple of years. What an interesting dynamic. And that the shipping opportunities have arisen because of a glut of supply that arose from this boom in the pre-recession area to build more ships. It takes time to build these ships. They have a glut of supply. Causing prices to go down and stress on the shipping companies. But with the expansion of the Panama Canal slated for 2014, it could be there's more ships coming on the market, larger ships, which creates more pricing pressure, increased supply. So the dynamic of a continued distress in the shipping sector might certainly continue in coming years. I also think there's an interesting focus on sovereign debt. So we've seen that in the past with Greece, Cyprus. Argentina continues to be a very interesting situation. Litigation is certainly continuing, many catalysts to come, and a lot of debt that's trading both in CDS and through the exchange bonds and holdout bonds. So Argentina continues to be an incredibly interesting situation that a lot of investors are focusing on, and there are still many catalysts to come. And I think if you spend enough time on it, you can develop a view, not just on the underlying credit of Argentina, but on the litigation outcomes. So I think it's incredibly interesting.
Do you see any opportunities in European sovereign debt?
Yeah, a lot of it has already played out, of course, but you never know what will happen. You've had Spain, you have Italy, Greece is already restructured, Cyprus was interesting, but we're continuing to monitor it closely and ready to make a move at the right price.
Getting back to the U.S.
Sure.
And the dynamics in the power space here.
Yes.
There was talk about TXU, the biggest LBO in the U.S. history.
Sure, $45 billion, yeah.
Exactly, and I just wanted to get your thoughts. Do you think we'll see a bankruptcy this year, or the sponsor will manage to amend and extend and do some sort of maneuverings and keep the company going?
Obviously, it's a tough call to make, but I think there's a very good chance you see a late 2013 or early 2014 bankruptcy. You have a lot of constituencies here. It's easy to do a out-of-court restructuring when you have a concentrated number of parties or classes. We have a great number of restructuring potential classes, so it could make it more complex to do an out-of-court restructuring. So I think you might see something end of this year.
Can you identify some investors in the cap structures that would have some holding value in terms of litigation?
Sure. I think one of the interesting areas is the TCEH unsecureds. What you've seen historically with TXU and other companies is, like Dynegy, is an exploitation, arguably, by the holding company of its operating company. So in TXU's case, you've seen an extraction of value from TCEH for the benefit of EFIH. Now, those came through the creation of these demand notes that were allegedly paid back. Now, so that may purport to resolve the litigation issue since there was a settlement. However, there's still a pending lawsuit by one particular hedge fund based on the below-market interest rates that were paid by TCEH or by the holding company to TCEH.
Yes, already, as everyone knows.
Exactly, exactly. Now, however, I don't think that necessarily resolves the issue. My instinct is that for every bug you see, there's 50 more on the wall. So while we know there were some notes that were paid back, we don't know what other value was extracted out of this operating company and sent over to the regulated side. My suspicion is that if you do a forensic examination, you may very well see more. And that will create an interesting dynamic of an attack by TCEH creditors on the EFIH side. And that will come either through the unsecured ad hoc committee or through a creditors committee, whose mandate will be to explore these issues. So it really takes what people look at as being ring-fenced and really points out the fact that just because something appears ring-fenced doesn't make it necessarily so. When you have exploitation, when you have transfers of value, that creates a litigation dynamic that has not been resolved simply by virtue of this settlement or the payment of these demand notes. People will examine this very carefully, And thinking about motivations here, I can see an examiner spending a lot of time and money, which, by the way, is a mandatory appointment if someone requests it, to examine that dynamic.
Dynergy's case.
In Dynergy and in ResCap. Right? See, ResCap is another great example of an exploitation by a holding company of its operating companies for the benefit of somebody else, whether it's a sponsor or another subsidiary. So it's always going to be a dynamic, and certainly will be one in TXU. And I think a lot of people will be focusing on this. And at the right price, the unsecured to TXU could be very interesting.
Thank you so much for your time.
Oh, my pleasure. My pleasure.